Okay, great. So, yeah, thank you to be part of this round. Some words. Yeah, I'm a co-founder of the Institute for Applied Blockchain and also a founder of several startups. I'm now since more than 6 years in the blockchain environment, setting up special services on this, also with focus on industry cases. And also we have a lot of activities in research area. So in a normal industry, let's name it, but also in the defense industry. And today I would like to present, from our point of view, a really important topic, how blockchain supports the way to net zero by reliable carbon footprints of hydrogen. And how does it work, and then a short overview about this topic. So first, so why it's not, here. Okay, some words about the challenge. It is, at the end, it's really the focus on reducing the carbon footprint for hydrogen. And when we looking on the value chain and how does it produce, and also now here in the cost for Africa, or around the world, we see more and more that energy and also hydrogen is produced outside from Europe and delivered to Europe or Germany and so on, and here consumed in different industries. And the production is the starting point. And there it's really important that we have renewable energy sources. So, and also to have it here transparent and tamper-proofed and so on, that we have here really the right energy sources. So that's not produced, for example, by oil, gas, or something like this. So that's really produced by renewable energy. And then the transportation is a really important aspect, because also the transportation itself, it produces additional carbon. And also here it's more interesting that this is short, or that is carbon reduced. And also at the end in the consumption itself, to see that hydrogen is really produced with a less carbon footprint. And this is a really big value chain, and it's really a complex topic. But here it's really important to have trusted information, reliable information at the end when you're buying it and so on. And let's see it more from the solution point of view, how also I come know more and more how blockchain can support this whole value chain stuff. And when you see the value chain itself, you can divide it in two major aspects. The first one is the product flow. So along the value chain, so electricity is generated. So here it's really important. It is renewable energy, for example, from the sun, solar energy, water, or renewable. And then you have in the next step the electrolysis, so the output for the hydrogen itself. So also you need clean water and so on. A lot of different aspects, but here it's also you have the footprint will grow. You have some additional aspects, but it's so important that the footprint is as small as possible, and that you can monitor it, that you can prove it, that you can show that this is really original and proven. Then we come to the transport in different ways, different way how you can transport all the things. And at the end, the consumption itself. There we see more different industries. For example, at the moment, more the bigger industries, chemical industry or other industries, but also later for transportation, mobility, for example, planes, ships, cars, and so on. And always here, it's really important to see how big is the footprint of a ton of hydrogen, how much carbon is CO2 is used for a ton of the produced hydrogen. And in parallel, we have the information flow. So that means we have along the value chain, we need to transport information which are reliable and also system independent. because you cannot create, this is such a complex process along the whole value chain. It is not possible to set up a monolith. You need something how you can transport it with an interoperable way, and also trusted and reliable information combination. And that's really, really important, what we see in all our activities, what we are doing now at the moment. And let's go a step deeper. We come now more to blockchain. One, I don't want to go too deep into it, but one important element what blockchain can support is this aspect of digital proof. So what's here also important, you need to be sure that the information what come into the blockchain are trusted, are certified, are really reliable. Only if you have it in a clear thing, then you can bring it along the value chain. If you have, we often name it also shit in, shit out. If you don't have good information, the right information, for example, that the energy, that the source energy is really from solar energy, from water generated, so it is renewable, and you know how big the footprint is, then, and it is trusted and certified, and you have really a clear source, then you can put it and monitor it by the blockchain. Is it not correct? Then also blockchain is here, cannot help it, cannot make it then correct. But only to see what is the major aspects. Then in the blockchain world, you can use these digital assets. It's token, digital O token. There are different standards growing up more and more, which you can use to store this reliable information and transport it along the value chain, along different systems also. Because you don't have here, when you see it, for example, the energy is produced in Africa, and it is and for example, changed to hydrogen. The hydrogen is transported to Europe, and then at the end, perhaps used in a car. Then you have a lot of different systems involved at the end, and it is not possible to do this with one single information system. And that's the reason why we think that especially public blockchain is here a really important element to enable this process. And we see it also in projects, what we are doing. And the blockchain you can see as like a decentralized registry. So we have at the beginning, for example, the energy produced, for example, by air or by solar. You need to document it. You need to have a decentralized register where you really monitor it on batch level, on perhaps at the end on a time frame of 15 minutes, so that you really have a clear picture on batch level how big is your footprint. Because it could be that you have, for example, solar on the day, solar energy on the day, but you put in grid energy or use energy from the grid, which has a much bigger footprint. And in combination, it is changing the whole day, and it's really dynamic. And you need to monitor this on production, on batch level. And blockchain can support here to store this information, but also transport it along the value chain, and you have this information trusted, available, 24 hours around the world, the whole day. And that's other major aspects. And let's deep dive in the next step. Then one thing is the blockchain can help to store. When you have certificate information, you are able to store the information in a reliable way and tamper-proof and so on. And you can bring it along the value chain, and you can load it into different system, ERP system, whatever systems you need. And you can write it down when you follow the correct process. And the other thing is that you need an opportunity to read this information. So you need a user-friendly way to track this. And this is one example how we do it. to really to bring the whole stakeholder together. For example, who certificate the process, who writes the data, what is the batch, from which source, and so on. All this information need to be clear, and then stored in the digital asset, like a digital token with metadata and all these things. And then you're able also, when you deliver it, you can read it out, for example, on a delivery note, on the product itself, and so on. And this information is also then available 24 hours the whole day. Also, if, for example, the company which at the beginning produced the product does not exist anymore, the information will be there because the blockchain still available, has this information available. And such a digital product passport, you can see it like a window to the blockchain so that you can see this information. And yeah, that's so you have the decentralized network. There's a digital asset which is transferred along the value chain. You load it into your systems, you write it out, for example, from the IoT system, write it automatically out. You have your digital proof, and then you can transport it along the value chain. And based on such a digital product passport, you can show it for the end user or for the all participant along the value chain. And yeah, so a short summary of how blockchain supports the way to net zero, and especially it's now here for the hydrogen economy. What are the pain points at the moment? Yeah, we have a lot of systems involved in this complex scenario. And today it's really intransparent. So it is not possible really to transport reliable information along the value chain from the beginning to the end product. And that's not, with current systems, this is not possible from our point of view. Then also what we see in our research and projects, what we are doing, that also self-declaration is also not it's a pain point at the moment. So self-declaration, you can manipulate it. This information, you cannot trust on it at the end. Also, when you really look on it on a compliance level, and is it really legal information, and that you can really trust on it. That is, by our understanding, when you really look on a complex system over more than one or some systems, then it is not possible from our point of view. Then there's a big pressure in the market for collaboration and a reliable data exchange along this, because there are more rules are coming. The regulator is more looking into these aspects. And so you need to check it from the beginning, but also from the production. For example, when you're in Africa, you produce such energy, and we see it that is more coming up there, because it's a really great area with high potential to produce renewable energy or energy sources by like hydrogen. And yeah, there's a big pressure for collaboration and reliable data exchange. When you have these renewable produced energy, then it's good really to also to show that this is really renewable produced. And also today there's a lot of manual work. You have high transaction costs and so on. And that's the reason why we come to blockchain. So one major aspect is you can improve the logistics, how we show it along the whole value chain from the beginning to the end product. And you can secure the data integrity. So when you have the data trusted into the system, then you can trust it along the value chain. So that is, from our point of view, really important. Then as you have these digital assets and digital certificates and so on, you are able to program it. You can make your business logic high automated. So you can automate your system from the beginning to the end product. And by this, you come to reduce transaction costs. And yeah, you have by the decentralized network, it is high available. You have it around the world. It has a lot of nodes and so on. The data is not, it's tamper proofed and so on. And these aspects, it's the blockchain aspects. It helps also to have advanced or enhanced cybersecurity. But yes, you have the issue of transparency. But from our point of view, without transparency, this will not work. So at the end, you need a public system to monitor these things and to show that you have reliable information along the value chain for hydrogen production until to the consumption. And yeah, and also one big value is that you're able to produce reliable interoperable carbon footprint for hydrogen. And that's from our point of view in this big version only possible by such technology. And yeah, so that's I'm coming to the end of my presentation. I hope I'm still in the timeline. And if we have some minutes left for some questions, I'm really happy to answer. And yeah, I'm really happy for the next steps about this conference.
Christoph, thank you very much. Immaculate timekeeping. And of course, I tricked you. I have a spare 2 minutes for questions. So please, if there is a question in the room, please speak up now.
Yeah, I would have a question about the details, how the technology works in particular here. So there is a technical setup in the middle who collects all the information. So how does the participants interact with that system, and how is the proving mechanism that the inputted data is right, and how is it different to just a normal IT system where, let's say, a proving team sits on and just asks for documentation? So how can you build that proving mechanism into the technology?
Yes, sure. So Richard, so we combine the standard technology, what is existing today, and connect it with the blockchain technology. So you have, for example, when you need to start at the beginning. So producing, for example, renewable energy based on solar energy or air energy or something like this. So you need to start at the beginning. You need to show that this is really renewable energy or produced by renewable energy. There we have smart meter, IoT devices, and so on, which can monitor it. And here you need a company like a TÜV or like a certificate which prove that how you integrate it. We have, for example, Web3 services, which you can directly connect with your IoT device, so that your IoT device write down the transactions and the digital assets and the digital proof in a correct and reliable way. And this needs to be at the end proven by an independent certificate. So yeah, let's name it in this way. And then you have the data, because you need the service, you need the person, the company who's producing it, so the renewable energy, but you need also an independent authority who check it and give the final improvement. But when the process, for example, when the solar or the fields there's no changing, then it's okay, because it's running in this way, and you can also monitor it, because when you have, I don't know, 10 square kilometer solar field, then you know how much it comes out. And if you produce more, then yeah, there is a warning coming, and someone need to check, and independently need to check what's going on here. And that is an example. But yes, it needs to be proven at the beginning.
Understood. Thanks.
Thank you. We would have time for one more quick question. Daud, you have already. Thank you. You have done well, but maybe there's somebody else interesting in a question. Okay, then Daud, please ask.
Yeah, I was just wondering, like, how you should as your product, if it's prepared like for that upcoming ESG regulations, because it looked like you were going down like from the beginning of the product to the end, and for me it would make sense if you would go in that direction. Have you thought about that, or is that a preparation?
Yeah, we think about it, but at the moment we're really focusing on what we think, and also in the projects what we are working is to make the footprint transparent and dynamic, calculated and available along a value chain. That is a little bit the major focus. And what we see is that these are reliable information, which are also relevant for such ESG reports, because at the end, you need to show that you have a trusted ESG report. And for this, you need reliable information. And when you can show that you have reliable information in a high automated way, because we are not looking to do it via Excel and all these things, and that you have a nice report, so that we really have automatically on 50 minutes basis reliable information, and you can always report it, not only at the end of the year. You have it in real time, and that is what we are looking for. And also from the aspects of the business, from the aspect of the technology, but also from the legal and requirement point of view and certification. So we really look on the whole picture on it, and not only because you need to bring all these things together, and it's complex. And
yeah. But I love the option that you could be also a service provider in that huge field and specialized on that. Like, I really like
yes. Yeah, that's also what we are looking for, so that we can provide the access to the blockchain services, that we can provide the services to connect it with the IoT systems and ERP and all these things, so that you really ramp up at the end on button, mouse click, and you can make your renewable energy ready for the things, for example, or your hydrogen, or your transportation, or your consumption. So because from our point of view, you need there some major services elements, and then you can integrate it, and then you can do it.
Thank you both.
Okay.
Thank you for this discussion. Christoph, you may want to stop sharing your screen. That's
sure possible. I can do it. So
wonderful. Thank you. Okay, that was a fantastic start, and let's move on to Richard. Richard, are you in? Are you here?
I'm here.
There you are.
That's
wonderful.
Me.
Okay. Richard, CEO of Schunk, important player in the insurance market. I recently visited the wonderful city of Gotha, where there is an insurance museum. And maybe we will learn from you today why traditional insurance companies will soon end up in this museum if they don't embrace new technologies and develop a digital mindset. Nevertheless, floor's all yours. You have been in this industry for many, many years, 2 decades. And now, well, this is an interesting title you have chosen: Platforms, Our Way for Efficient Cooperation, or Straightway into Digital Slavery. Wow, this is quite a cliffhanger. So please, Edward, the floor's all yours. After 18 minutes, I will make rumbling noises, so we have time for 1 or 2 questions. Thank you. Fire away.
Yeah, thanks for creating such a great stage, and a warm welcome to everybody. I put the title a little bit more aggressive to gain some attention, because when it comes to platforms, I'm absolutely two-hearted. On one side, I love the potential, and I see how they can help transforming entire industries. But on the other hand, I also see some major downsides when we don't play it right, which could lead to digital slavery, to put a little bit pathetic. Yeah, I think there are a lot of downsides we need to be all aware. Otherwise, we just give all our value to other people, and that is something nobody should be interested in. Before I dig in, maybe some words to myself, because I'm not only here within my official CEO role, I'm also here as a human being and as the father of an 11-year-old one. My insurance background is not 100% related to the presentation, but of course we are a market leader, as you pointed it out. We drive the risk management portfolio, or the risk portfolio of our customers, and Schunk is the leading risk manager for the logistic industry. We belong to Ecclesia Group, who's market leader, one of the biggest risk managers in Europe. We have 70 to 80% market share in some aspects. So that means that our decision, which platforms we enter or support, has significant impact on the positioning of the platform, because we just represent so much market share that when we enter, we help them to gain importance. And the question is, what happens once they gained it? And that's a little bit what the presentation is about. Let me see. There are gazillions of platform definitions around, so that we just talk all about the same thing. I just put some remarks together what a platform is for me. It's a technology which provides a framework for people and companies, platforms usually allow to create content, to share stuff, to interact with each other, and to transact. Yeah, so people bring stuff on platforms which other people are interested in, and there is always there should be the options or the features, the functions to get into contact with each other, to discuss stuff, and to interact, to make deals, so to share something. Being it knowledge, being it information, or being it product and services. I think we all are part of platforms on the social side, LinkedIn. We have comparison platforms in the insurance industry where you can just type into your risk informations, and the platform then collects offerings from different markets. So you can say, I have a car which is 10 years old and it was driven 100,000 kilometers, and then the platform brings you all the market offerings from different insurance providers, and you can just bind and buy and bind your service offering. So when it comes to advantages of platforms, I think they are very obvious. They drive efficiency, they drive transparency, and many other aspects we are all aiming for. And when you have a look of the development of platforms, I think it is very obvious that this is not only a short-term trend. And when you see how the rollout of successful platforms, the period of time they gain significant user volume gets shorter and shorter. It has been years at the beginning of those days, and it's days until great platforms reach millions or 10 millions of people. So the impact on the society is already huge. Is already huge, and that's why for me it is so important that we get the setup and the structure and the rights the users have and the providers have in a right manner, because something wrong here will last for long. And when you look a little bit on success factors of platforms, and this is the bridge to come to the challenges. There are network effects, for example. I mean, you all know it with WhatsApp and LinkedIn. Even when you don't like or don't trust these platforms, it is difficult to escape. Because when all your friends are on one platform, another platform which is more secure, like Signals or Telegram or whatever, it is more or less impossible to move there because you just lose so many value on the way because of these network effects. The winner takes it all. The data created by those platforms is enormous. When I take the Facebook example here, even when Facebook is an old-fashioned thing for my parents and not longer the hot and fancy shit, but when you see how Facebook was able to track user behavior, to understand user profiles, they can tell you after some usage, what political party are you in favor? What's your sexual orientation? What's your status are you married? Do you have kids? What are your interests? So the data generated based on user behavior is just enormous. And I think this is also one of the reasons why platform usage is kind of without licensing costs. But of course, the data will be used and will be monetized. Another success factor is just convenience. I can give an example. When you wanted to buy insurance in the past, you needed to write to several insurance companies. All insurance companies have different methods to assess your risk profile. So they ask you different questions in different matter. You get paper back, emails back, telephone calling back, whatsoever. And at the end, you need to sort out and compare. When you're on a platform, you type your data in, you see market overviews, they can be compared, they are all in the same structure, and so on and so forth. So convenience is just enormous. And this is not only nice, but it also from a cost and efficiency standpoint, super important. You can eliminate man in the middle who help aggregating data to help having market overviews and all these things. So huge and great benefits for anybody. And of course, innovation, I mean, new business models are possible because costs are just getting down. You can reach more people and so on and so forth. So that just leverage business models which were in the physical world just not thinkable. So that was the positive side. So let's innovate and digitize and have all a great time with platforms. But I also see some very big downsides in opticals. And one is due to the network effect. When the platform plays its role great, it tends to monopolize. The winner takes it all. And I was working for a stock listed company as a CFO. I was doing fundraising with private equity. I know how that shit works. I mean, somebody wants to have a big check at the end for the investments which have been done. And this monetization usually goes against the users, because when you have a monopoly, the costs of leaving you, or there are no alternatives, or your costs of changing to other suppliers are huge. And with private equity or stock markets in the background, there will always be a finance guy saying, where's my fucking money? Yeah, so they will start monetizing the users who made the platform great, who brought all the value, and they will just stay under the level of pain of leaving and monetizing them to death. Data exploitation and misuse. I mean, the US election was manipulated more or less with Facebook data. They bought profiles of users and played specific advertising and content to these users to drive their fears, to play with their traumas, to influence behavior of people. And there was never consent for that, but it is just a misuse, and it's difficult. And I mean, Facebook made huge developments and so on and so far. But still, you can never be super sure, 100% sure what's really happening with your data. And whenever you just downloaded your data report or your GDPR report from one platform, it's useless. It's thousands of sides of Word documents, but you cannot really do something with it. And the lock-in effect is what I mentioned before. I think it's very clear. You just cannot move on. So my research question is, how can we harness the advantage of platforms while preventing the emergence of tech giants through monopolization and excessive monetization? So how can we avoid slavery, because it is kind of slavery. Also Amazon, when you see what they do with the data, how they bring in own products, they take out all the profit at the end, or most of the profit at the end. They just keep as little profit as possible to the users and try to gain everything for themselves. On the other hand, how would our life look like without Amazon? I mean, I use it excessively, intensely all day long, but the price is still huge. And the idea is, and it's an early stage, and so I'm very much interested in the discussion, and I will stop after that slide. So how can we create platforms which are owned by the users, or by the users who bring the value, who bring the data, and who make that, or who bring the service offering, the companies. So how can we do that? And I just collected some principles platforms should apply to. There should be a cooperative ownership. Because not one should own anything and collect all the money when the majority of the people just bring the value. The monetization should be transparent and fair. So it should not be the thinking, how can I squeeze as much money out of my users, knowing that they are not able to go away, but there should be a pay for value kind of mechanism. Although this data stewardship and privacy, so who has control over the data? Is it the platform itself? Can I decide what is done with my data, and so on and so far? It should also be open, so not trying to protect the monopoly, but trying to make existing platforms more open to other operators, to other businesses, to other business models. And of course, we need also to train the people about the platform, so that they can behave right and use it right. That being said, I came to some challenges. So what's the challenge? And there's the question: how can decentralized technology play a role? But how to gain the necessary capital for the build up? Because it costs money to build such technologies up. And the more business case agnostic the platform should be, the more complex it is. But we kind of need digital infrastructure in terms of platforms. But who should finance it? How to incentivize the founders? When you have usual incentivization schemes, so they own a share of the profit of the company whatsoever, this sets a wrong incentive, because when your goal is to increase your income, your users or your user goals are not your first priority. What legal framework can be done? The framework should be stable on one hand, so that the overall goal is kind of fixed. But on the other hand, with new technologies coming in on a day-by-day basis, then we also need flexibility. How can the governance of those platforms look like? Who has the decision power? Who drives the product roadmap? Who decides where to invest, and all these kind of things? So there are many aspects which are currently kind of unclear or unsolved, where I believe which are fixable when we collectively drive regulation and use technology in the right way. That is my input, and I'm very open for questions, comments, or remarks.
First of all, thank you very much. You may want to stop sharing your screen so we can see each other. I bet we will come back to these guiding questions that you have prompted. Thank you so much. We do have a few minutes time for discussions. May I just start with one, because that's really something I was wondering. So I think your analysis of the let's say benefits and the threats that platforms are imposing on us. How could blockchain technology play a role in, let's say, mitigating the risk and at the same time not curbing the opportunities platform economies are presenting?
I mean, first of all, for me, the decentralized approach is one of the answers. When ownership is distributed and rules and procedures are agreed within the mechanisms itself, it is not one CEO driving the agenda. And with the community and consent mechanisms within decentralized solutions, the crowd can kind of develop the stuff further and decide. Of course, this also has limits, but I do believe that decentralized technology can play a major role to overcome some of the obstacles. Not all, I think, but it is one corner piece.
Thank you. Any other questions from the room? Okay, then, guys, let's first of all, round of applause. You can use these wonderful icons to show your approval. And I can also see whether you're still alive. You have switched off the cameras, which is something this is always difficult for me as a moderator. My job is to read a room, but if I'm blindfolded, how can I read you? So any camera switched on is, of course, a great advantage for us as the conference organizers. Thank you so much, guys. Okay, thank you, Richard. We quickly move on. Now we have a double whammy. We do have two presenters. We have Regina and Holger, if that's correct, from the company SPICE5. Title of their presentation is going to be How Blockchain Technology Creates Value for Industry and Government. Thank you very much. Me as a layman, that's the answer I need to have answered today so I can explain to my children what I'm doing all day. So thank you so much. Regina, you're in the industry, in the digital industry for many, many years. As an advisor for the IOTA Foundation, you are also a distinguished speaker and consultant. You are the founding manager of SPICE5, and really interesting to hear your opinions, Holger. If I understand correctly, you started as in the world of corporates, right? You started with Siemens and as an IT expert, managed globally IT service portfolios, and then you went to start your own business. And I'm really interested to understand, especially how industries can benefit from blockchain technology. So guys, the floor's all yours. Rules apply. I will start to make some noises. If you finish earlier, we have time for questions. Thank you so much, Regina and Holger.
Thanks, Oliver. I guess you can all see the screen now that this works.
Wonderful. Yeah.
Awesome.
Yes.
Regina, unfortunately, had she had a change of plans because her flight was canceled yesterday without any comment. So she had to completely reschedule, and now I'm sort of like taking over the whole presentation.
I'm sure you will do a tremendous job. Thank you.
Thank you, everyone. And thanks for taking the time. So let's dive into how blockchain technology creates value for industry and government. Just see here. Yeah. A little bit about me. So I've been working in the corporate background for more than 25 years. I was responsible for several global managed services at Atos, built up several deliveries also within the IOTA Foundation. The last 2 years at Atos, I was the CTO for the Telefonica account because Atos won a larger transition and transformation project there. And then I thought, I've done now 25 years of corporate. Let's do something completely new. And I started to tend towards the blockchain space in 2018. And then worked at the IOTA Foundation as Director of Partnerships and Market Adoption to work with corporates to understand how blockchain technology can be utilized in their use cases and also as part of their tech stack. And as part of this, we talked with easily over 200 larger corporates And then we started to saw a pattern, like where they're struggling with the adoption. And then at one point we said, all right, the IOTA Foundation itself is a not-for-profit organization. We cannot really scale a business in a not-for-profit organization. So now let's find spice to make blockchain adoption as easy as possible for those corporates. And I'm here with a number of use cases to show the benefit blockchain can bring in governments, but also which use cases are currently being implemented. And let's start like on a high level, because we already heard like before from Richard as well, that the decentralized aspect is like key. And blockchain, or like over the past 5 years, blockchain has often been presented as like I would call it the savior in air quotes, when even it didn't make like a lot of sense, no? Because maybe some solutions are just better with a cloud solution, and we don't even need this decentralized approach. No? It always comes down a bit to the question, whom do I want to empower in the end? And am I, especially for businesses, am I willing to give up a certain share of my power to work in this new world where data ownership is not maybe even tied to me anymore, but it's tied to the person who is creating the data, no? And who is like maintaining the data. And so for this, identity verification, of course, like is a big part. And this is like where governments are also starting to be like quite strong. So there are new standards for identities, like here the EIDAS 2.0 in the European Union, which is emphasizing like self-sovereign identity. We're also starting to see more wallets, more open source technology coming out, like here the Unimi or the Vira identity wallet, which can demonstrate how it can do like a digital driver's license or a digital passport directly. And then I have my security, which is cryptographically protected, which I can use online, but also like offline. Of course, it needs to work offline, no? Like in case where the remote connect is not really there. We are starting to see land registries. I'll come to that then also in a second, because, and we are starting to see those use cases, because coming back to what I said before, blockchain is not good in everything. It's not the savior for all of it, but it's extremely good in a very, very small niche to understand who owns how many tokens, for example, to document immutability records, no? For, like we see here, for property ownership. And it can do this like in a public register, so where everybody can take a look at it. But it can also be done in a private register. And this then has like the benefits that you keep the data private itself, but that when it's a good blockchain, and we can also come to this in a second, because not every blockchain is suited for this, that you can still like trade all of those assets between those different chains, no? And ideally you do it without any additional costs. And then suddenly you start to have like a network which can grow, which is scalable, and which is starting to be interoperable. Supply chain management is a big one as well. So government procurement, to have like this transparency. We have been seeing this over the past years to increase, especially like in the automotive industry, when you wanted to build, like for electric vehicles, you wanted to build batteries, and you needed to document like where your rare earth minerals are coming from, so that the cobalt is not coming from any child labor mines, for example. There are also some cloud solutions for it, but supply chain tracking is like one of the, I would call it like low-hanging fruits for blockchain, simply because it involves like a high number of actors which are working at a single source of truth, like when was what where, essentially, and will it arrive in time. And there we can use blockchain to protect the anonymity, because like meta-analytical attacks are also then a concern when it's a public system. Then we are seeing voting systems. I will come to that also in a second, with what WorldCoin is doing, for example, what they are pushing towards. And we also see like health records, for example, to have like a more streamlined process and a more automated process. So in general, we can say that blockchain makes sense where you have like a lot of actors or a lot of participants, where you need a single source of truth, and where you need certain immutability aspects or traceability aspects in order to understand if the data wasn't altered, or to confirm that the data really wasn't altered. And when the data then started to need to be exchanged, and you don't want to, especially with health records, you don't want to trust like only one provider, but it needs to be like a streamlined process, again, across many participants. There are also a couple of challenges blockchain in government. Fortunately, the largest ones, they are starting to be solved. So regulatory hurdles is like really a big one. We've been seeing this over the past 5 years when we talk to the companies, that they're all struggling a bit. Like, if I save data to the blockchain, am I now with one leg already in jail? No, like, what data should I even save? Is it only a hash? How do I do it in a public system, in a private system? How do I do it like in a hybrid system as well, which is interoperable? And we've been seeing that there are new regulations, like the MiCA framework, for example, in the European Union, because blockchain is now starting to have, how to say, with more regulatory clarity, like more companies are also again looking at it. And we've been seeing over the past 5 years that in the beginning, the companies, they wanted to build their own chain, like Daimler did their automotive chain, for example. But then, of course, Renault never would join like a Daimler chain, independent like of what Daimler was stating, that there's a governance model and so on. So they all saw that they are not AWS or Google to just like push it into the market. Then the consortia chains were starting to form, so a lot with Hyperledger, but there you have the problem that it's really a consortia. You cannot also really extend the consortia because you're quickly running into scalability limits with traditional blockchain technology. When you have like a lot of participants, like let's say you have 200 participants, so 200 entities would also run then their own node and their own servers for validation. And very often this causes a problem because simply the blockchain tech where you have the blocks, it doesn't scale. But there are new approaches. This is also good. There are now directed acyclic graphs with what SUI is doing, Aptos is doing. The IOTA Foundation has been pioneering this new model over the past 6-7 years, where you can start to handle transactions in parallel instead of serial. And this gives you like great scalability in the end, because you can suddenly not only push like 1,000, 2,000, 3,000 events per second, but you can start to push 150,000 events per second. And then we are not even talking about scalability through specific layer 2s or like additional blockchains which are anchoring into this underlying blockchain. So there's like a lot of potential here. Privacy concerns, of course, is a big one. We just had this. Nobody wants their health data to be publicly accessible. And then, of course, we are like a bit stuck in this conundrum with like, this is how it worked before. How should we transition it now to a decentralized system where all of these like regulatory hurdles, scalability issues, and so on are starting to come together and need to be evaluated. And then we have the energy consumption. We are hearing it all the time with Bitcoin. 99% of the energy which is used on Bitcoin, or even more, 99.99% probably, is in the end just a waste of energy. And now they are starting to be like many more energy efficient systems as well. Again, like in IOTA, like for example, for the energy consumption of 1 Bitcoin, you can do like over 1 billion IOTA transactions instead of 1 Bitcoin transaction. And this is something which also like needs to be concerned unless we suddenly have a really big surplus of energy, but we are also not there yet. And then let's dive into the different case studies. So what we are seeing at the moment is that blockchain is starting to be used on multiple fronts. There are like a lot of innovation programs as well. Estonia has been doing it now for quite some time with their digital e-residency. They're also pushing in the e-health sector. Dubai has been coming up over the last year because it's a very charming, combination of regulated zones in combination with a short decision-making process by the royal families in the UAE. So in not only Dubai, but in general, the UAE, they are becoming like the go-to hub for blockchain projects, because the decision process is like very small. They're establishing these new economic zones, or I can call it like a regulatory sandbox, where it's like easy to just test certain things and see how it will apply. We have been seeing these zones also popping up like in more countries, but Dubai is pushing this with a speed which is, I would say, quite unmatched, you know, over the last year. The United States as well, they're looking into it, of course. Singapore is a big hub for blockchain innovation. Switzerland as well, you can even like pay your taxes in Bitcoin or in Ethereum if you want. And some of the African countries, especially we've been seeing it in Kenya, they are also pushing for digital innovation to enable small and medium businesses to start to utilize digital processes. I also have an example for this. Let's say a flower farm is producing flowers in Kenya, and there are organizations like Trademark East Africa, and they are pushing towards those digital processes. They're skipping the whole paper trail simply because it just causes like a lot of friction. And then you can start to look into how can I enable the companies in my country with digital papers, with cross-border payments, with supply chain processes, so that they can focus on their business, growing flowers and exporting flowers, and that the overhead footprint is as little as possible. Yeah, this is from the United States, from the Homeland Security Department, but they are looking into it at the moment. So also here I could see like digital identity or decentralized identity, paper-based credentials, immutable audit logs. I also have to say like audit logs is like one of the low-hanging fruits, because you simply start to like connect your cloud system to a decentralized system. And with this, you have like all of the benefits of having like this immutable trail, and it's actually very easy to use because you are just pushing an event to the blockchain, or even just pushing a hash of an event to the blockchain, and then you're documenting the data here resulted in this hash. We are logging the hash, and 5 years later you can still show that when we are creating this hash or this digital fingerprint of the data again, it results in the same fingerprint as we have documented 5 years ago. And this proves that the data wasn't changed. Then supply chain traceability, steel and oil, and so on is what they're doing as well, security processes, and then of course, like worker licenses, visas, and so on. So to have like everything in your app as easy as possible. In Europe, there's like a similar approach. So the European Union is pushing a lot with EPSI. It's the European Blockchain Service Infrastructure. It's about like, how can I create private environments where businesses can interact with each other, which are also interoperable in the end, in order to facilitate trade documentation. Again, this like single source of truth. We have like a lot of actors which can then tap into each other without relying on critical infrastructure. And Europe is pushing quite hard, because when you look at the large players, we have Google, AWS, we have Tencent, Alibaba in the Asian region, but Europe doesn't really have like a critical infrastructure. And this also means when like Google is at one point, when the geopolitical situation might escalate due to some reason, and Google is like pulling the lever because of some regulatory aspects or governmental aspects there, then probably a lot of Europe would go down. So there are some initiatives like Gaia X or like also like Catena X to show how can we build a scalable critical IT infrastructure in Europe, and like EDSI is like one of those initiatives to use blockchain as part of this. Then WorldCoin has been launching their orb like, I don't know, 6 months ago. So, no, it was in June, I think. And for them, like one of the major use cases is voting. So what they are doing is to show when you want to vote on something, that they provide a digital identity or the fingerprint of a digital identity, and you cannot really like reverse it back to the individual human, but you can vote with your WorldCoin ID. They're using zero knowledge proofs to really make sure that the data cannot be like reverse engineered. And essentially what they are providing is the question, the answer to the question, this person who voted here, is it really a unique human? Yes or no? Also, when you register in the WorldCoin app, you don't need to provide any email address, any name, like nothing like this. And I think it's quite an interesting approach to understand to transfer the uniqueness of humans into the digital realm and really close this very last mile, which we have been struggling with. And when you look at the progress of AI, for example, of just the progress of what Midjourney AI has been doing, where you can enter just a prompt and then it creates like almost a photorealistic image. And there's like a big concern also with KYCs, that this is why when you do a KYC and you have your passport, that you need to like wiggle your passport a bit and you need to move the finger in front of your picture and behind the passport, simply because deep learning technologies are getting so well that even you can fake a KYC process over a video camera. And this is like where a WorldCoin would come in, and then it would state, all right, there's one person, we are scanning the iris, and this creates a unique digital fingerprint. And with this, we can for sure close this last mile to answer if this is like a real human or not. Yeah, then in Sweden, they are pushing like for the land registry, for example. They've been testing this because it's also quite a nice use case for automation. When blockchain is good at something, it is to understand who owns how much of what in the end, and then you can start to transfer this to your previously paper-based processes, and you have this unique single source of truth. This is the project with Trademark East Africa, which I was mentioning before. It's called TLIP, so you can go to tlip.io. This is happening in Kenya, and they are testing cross-border payments, but also how to document. And I think they have now 12 countries in the partnership. So between Kenya and the UK, they were the first one to test this out. But they have now up to 12 countries where they are testing this to really show how you can digitize processes. And this is like driven by Trademark East Africa. It's like a large organization in East Africa, where they're also building roads and infrastructure just to enable the country to take essentially the next leap. Then we have here Estonia with health record management as well, not to go into too many details because I'm seeing I'm starting to run out of time already. Oh, there's a spelling mistake. Sorry for that. So for cross-border payments, it's also quite interesting because we're seeing that the global trade is of course like getting more and more, and they are like the larger, like logistics providers like DHL, UPS, and so on, which are importing like a lot of packages from China and around the world. And for them, it's like a very, very cumbersome process to do those cross-border payments, to tax the stuff which is coming in. So there's like a larger initiative as well between different banks at the moment, where it's estimated that it's going to be like a financial system for like $7.5 trillion per year, just to better automatically exchange those types of payments with CDBCs, so like cryptocurrencies, which are handed out by the government, and where you can start to automate and streamline those processes like with a lot more efficiency. Agriculture is also now going towards the industry part. It's quite interesting. Farm United has been building a sensor, which is like, I don't know, 2 meters high, with like 12 different sensor types. So to measure the temperature of the ground, is being buried into the ground actually with about 1 meter. So to understand if your crop is dying, was this really because of the freeze of the ground, for example? And this is then applying to like other farmers, so that our farmers can understand how the weather situations are, to have like really the detailed metrics when you place these sensors, like one on each field, for example. But it's also quite interesting for security, for insurances, because like a large cost factor for insurances is to actually send someone there to investigate. And if they can start to automate this with trusted data, with secure modules which are signing those which are signing those information sets like ground temperature, wind flow, and so on, onto a blockchain, and can also be a private blockchain in this case. It doesn't need to be a public blockchain. Then they just save like quite some money. Tokenization of real estate is also something, because suddenly you can make real estate investments attractive to micro investors as well. So when you want to spend like 500 euros on a skyscraper, it wasn't really possible until now. And this very much ties into the whole tokenization of digital assets, which we are just checking here. Tokenization of digital assets in general, where we are starting to have like also bonds which are being tokenized. And this is like something completely groundbreaking, because now we have the regulatory clarity, or we're starting to have the regulatory clarity with MiCA and so on. So like, when is it a security, a token? When is it a utility token? And this is starting to become interesting, because until now, when you wanted to borrow money, you needed to go to a bank, of course, and there you pay, let's say, 8% interest. But DeFi has been growing over the past years at a tremendous rate. And when suddenly you can like tokenize, let's say, state bonds, then, and you want to borrow money and you want to put some money into DeFi, it was always a bit of a fishy thing, because you have Tether, where there are a lot of rumors and so on. But so you didn't really want to use it. But when you can say, if you put money in here, I am backing your money with a state bond, right? It doesn't get more secure than that. Then suddenly it becomes interesting to say, I need to borrow 20 million. Yeah, I go to DeFi, and in the DeFi space, I pay only maybe 2%, and not 8%. So they're starting to evolve like at a rapid rate as an alternative to banks. And this is maybe why banks are also lobbying so hard in Brussels to be like the gatekeeper then also to crypto, because there's just a lot of business coming in. And then the future outlook of blockchain in government, smart contracts, of course, to automate more. Interoperability is really a big thing, because we still have like a lot of different types of blockchains. Within those blockchains, we can see this interoperability, but between those blockchains, you typically need a bridge. And the bridge is always a risk factor, because it introduces additional costs. You need to trust the bridge provider. It introduces like an additional risk for the user, additional complexity. Then here we have decentralized finance, but I just talked about tokenization of assets and bonds. Then we have the decentralized identity, so that you can be your like the owner of your data, what you produce. Maybe at one point it also makes sense to sell your data to somebody who wants to pay for it. Yeah, and then of course the transition to more energy efficient blockchain protocols.
Okay, thank you, Holger. Time is up. We are on a tight schedule, because the senior executive from the European Central Bank is in the wings, and we have allocated him a time stop. So I'm afraid I need to rush you a little bit here. Thank you so much. A round of applause. That was really interesting. We can truly say that blockchain is leaving finally the status of pilot projects, but it really is turning in many areas.
Thank you.
Sustainable business. So thank you very much.
And if you have questions regarding regulatory affairs, sustainability in the government sector, I can only recommend to talk to Mariana. She's like a senior expert for regulatory topics, and has been writing like a very extensive DeFi paper. And I leave it here.
Thank you.
So thank you very much for your time. And if you have any questions, always contact me. Happy to talk to you and spin up your own blockchain.
And we do have our water cooler moments where we hopefully can further discuss the topics. Okay, you may want to stop sharing your screen.
Yes. Here we go. Thank you.
So before the next break, thank you. Before the upcoming break, we have a fascinating. Basically, it follows up what the to what the other presenters have already talked about. Now let's do a deep dive into one important political topic in Europe these days, and this is immigration. And I'm really happy to have Tobias with us. He's from the Federal Office for Migration and Refugees. Please explain. Please spare me from telling you the German name. It takes hours to pronounce. So he's a technical project manager, software developer by training, and he will today delve into the integration of self-sovereign identity, blockchain in migration and refugee services. And the title of his presentation is Benefits of Digital Identity in the Asylum Procedure. So thank you very much, Tobias. Floor's all yours. Again, after 18 minutes, I will start to make unpleasant noises. Thank you very much.
Thank you very much for the introduction. So again, I introduce myself. I'm Tobias Konsek from the Federal Office for Migration and Refugee. As Mr. Scholz said, I'm the technical project lead in our project for self-sovereign identity, or well, more like digital identity by the principle of self-sovereign identity. We are a team of about 12 people working on different development projects in this topic. Currently, we're developing a minimal viable product for the registration of attendance at integration and language courses that the BAMF pays for. Yes, and we are active for about 3 years now regarding digital identities. And yes, in this talk, I want to give you an abstract on what is self-sovereign identity and how do we want to use it in the BAMF. And yes, so first of all, we have here this rather Spartanic view of very crucial, very basic principle in SSI, that is the trust triangle. In SSI, we typically have 3 actors, that are the issuer, the holder, and the verifier, and there is a verifiable data registry. And this is basically the infrastructure the actors are communicating with each other. So here's I have the trust triangle in a, well, not triangle, but it's from the content it's basically the same. So in SSI, the issuer can issue and or maybe revoke so-called credentials to a holder. The holder is like citizens, or well, the people that actually get digital documents or credentials, as we call them, on their mobile devices. Well, it doesn't need to be a mobile device, but speaking of SSI, it typically is it is a mobile device. Most people have a mobile device, and as we heard in prior talks, there are developments in wallets and digital apps for digital identity to hold such credentials. The holder can hold and manage their credentials and present information from these informations we call claims, present claims to a verifier. That can be whoever you're trying to interact with and share their data. And what is currently being worked on is to selectively share this data, not like, well, imagine you want to share your identity document because you have to someone has to check your name and you show your passport, and there's a lot more information than just your name. But I'll get to that later on. And in SSI, we have a trust layer that's often referred to as the verifiable data registry. Through this trust layer, without directly communicating with each other, a verifier can verify that the information a holder presents them is actually issued by an issuer, without contacting the issuer and saying, hey, here, this holder just wanted to show me some information. Is this really from you? They don't have to do this. They can check this via the trust layer. So now the trust layer, the verifiable data registry. What is this? It's basically, it's like a public address book where that holds so-called DID documents. DID is short for decentralized ID. It also can hold schemas for verifiable credentials, VCs, and it can be blockchain infrastructure, but it doesn't have to be. So I just talked about the documents. So what is a DID and a DID document? Well, the DID is basically an address to find the documents. It's a DID can look like what you see here. It's preceded by DID. That's like, imagine in a URL in the web, there's the protocol, the HTTP. Here it's the DID protocol. Then there follows the DID method. Here it's a special. It's more or less the network you're working with. Here is the sovereign. It can also be ETH for Ethereum, and then there comes a universally unique identifier. And this points to a specific the document where public keys and metadata of a certain digital ID, decentralized ID are held. So with this, you can reach another participant of this network. So when I say some different ID, I mean, technically this isn't just some identity, but technically this is typically a so-called agent. Agent are, those technical agents that interact in the network with each other for the user. So those are often wallets, like you see here, that can be a natively installed wallet on a smartphone, or maybe something like a desktop wallet in an organization. But they can also be cloud agents that are accessible via the web, and the very data isn't stored directly on the devices, but stored on a server, and you can access it via your your so-called edge clients. Edge clients, the use case for edge clients is more for private persons, where in organizational use cases you typically would use cloud agents, where you don't have to store the data of your, for example, employees on their respective devices, but on a server that the organization controls. But what is this data you're working with? Priya said those are verifiable credentials. Well, verifiable credentials is they are verifiable digital proofs, verifiable digital documents, if you say so, that can hold identity attributes, where the term identity is a bit more stretched in this regard, since in the context of SSI, many things can make up this whole identity of a person, not just your name when you were born, your ID, like here specific ID for a government has for you, but also your diploma or certificates you made at some point in your life, or maybe your health insurance card. This is all part of your identity. That is you. But what are verifiable credentials? They are cryptographically signed. They are immutable, and via selective disclosure, what I already introduced a bit further. You can, with verifiable credentials, you can share not just the whole credential, but present just the parts that are needed by the other part, by the other by the verifier that requests your data. And so you can protect your data. You don't have to share everything about you, but just what is needed. And furthermore, with verifiable credentials, we have the possibility for so-called zero knowledge proofs that I think were already mentioned in the one of the prior talks, where like imagine you want to buy a product that where it's required that you're of 18 of age. So in the example of here of Jane Doe, you can see she's born in 1976, so she's clearly older than 18 years. But when someone who wants to sell her this product requests her age, the verifier only gets shown, yes, she's older than 18, not her exact date of birth or her exact age. And so the privacy of the holders is more, the data is more protected. So, but what is this data? Well, in a more technical way, basically those are JSON files, JSON documents. Currently, in the also prior mentioned EIDAS regulation that is currently updated, there are, in this context, there are some discussions about these data formats also in the different research projects that are happening in Europe, like the ID Union, where we as BAMF are part of. This tech stack of the actual data is developing. We are currently working with JSON files and JSON for linked data for JSON LD, but the tech stack currently is developing in the direction of selective disclosure, JSON web tokens, but that's technical details. So what actual data is in those verifiable credentials? They typically consist of a schema, an ID from which issuer this verifiable credential was issued, and it holds the actual data, the credential subject, and some cryptographic proof that proves that this wasn't tampered with, so it is immutable. And here you can see this isn't some binary file like maybe a PDF that got signed and isn't changeable anymore and not readable as such without compromising it, but it's actually, maybe it's just a text file you could also read as a human being, well, though being a bit technical. But it is also as is readable by a machine, so without tampering with the cryptographic proof and with maybe signature that's in this file. It's a huge advantage. With this, with all that what I just said in the prior slides, we can reach an actual end-to-end digitalization. We can when we're working in our processes like the the asylum procedure, where, for example, imagine a perfect world where SSI or digital identities are already established. When people come to our office already with their digital identities, we just can request their data online, get them into our systems. We can verify that this data is actually correct and not faked or not tampered with. Without paper process, we can write the applications, for example, application for asylum digitally. We can import many data from those digital documents we can receive. As you see here, the application and the application evaluation, that's processes that are mostly internally. They are already online in our digital applications. And we can then at the end issue the application result not only as a paper document, but also digitally, to digitally reuse by the applicant, by the asylum seeker. And they in the following can reuse this when visiting other agencies when visiting other offices where they may have to present data we issued them. So they don't have to take their paper documents, bring them there in person, or make a copy, send them there by post. They can just send it via the internet, and this information can be trusted. That is a huge advantage. Yeah. Like here we can issue the data, and they can just digitally transmit them to other offices or other organizations. So a recap, what are the benefits of SSI? Well, we can provide fully digital services. We can ensure the better data privacy for users through, for example, selective disclosure and zero knowledge proofs. We can secure this data is secured and trusted through digital signatures and seals like specified in the eIDAS 2.0. We have machine readable trusted data that leads to better automation possibilities, that leads to a more efficient processing of the data, and reduces manual tasks like reading data from a paper sheet, putting them in our software that can be automated, that reduces also human failures in human errors in copying data. It's a better data quality, and we can just we can work just faster and reach our we have faster services. Thank you for your attention. That was my talk, and I'm glad if you have some questions for me.
First of all, thank you very much. Again, I will send my laws digitally over to you. You may want to stop sharing your screen, then we can have a discussion. Are there any immediate questions for Tobias? Let me ask the group something, because we have seen now a couple of really interesting presentations and use cases. Me being a layman, I'm just a humble economist. I don't understand technology whatsoever. I just have one question. Is blockchain technology, when it comes to business and government, still in its infancies as a series of pilot projects? Just let's not forget, this is the 8th blockchain HTW conference. Or has this train finally left the station and this is now entering mainstream business? Interesting to hear your ideas and comments. And to see your faces. Maybe you have camera down. There you are.
Yeah. I would say maybe Nina can also say something to that. Like as long as we don't have like everything from the regulatory side, like totally clear for a lot of corporates, not everyone will do that step. And right now we just see corporates which want to position themselves, which are strong in innovations and all that stuff, and the rest will come. But we're not quite there yet. We're almost there. Yeah, we see everyone is working on that regulatory side, and they saw that there's a huge potential, but there's still a lot of corporates holding back.
Okay, Don, thank you very much. Larry, I think you had raised your arm or hand. You want to share something with us? There you are.
I would like to hear from the group of, there's one issue, sort of the elephant in the room on blockchain, is performance. And I have not seen, I know the fellow from Spice or whatever had mentioned something about part of that had been solved, but I haven't seen anything that I know of. I mean, I know Ethereum's working on sharding, but until we solve that problem, blockchains are great technology in so many ways. it's very difficult to see it growing to the level it needs to for anybody without that performance issue solved, that scalability. So I'd really like to better understand that, because to me, that's the elephant in the room. There are other elephants too. They're smaller baby elephants having to do with, you know, the transition of proof from the physical world to the digital world. But without the scalability, we'll never get there.
And blockchain, and this is a fantastic subject. First of all, thank you, Tanya and Sylvia. They have been involved with HTW for some time. They gave us a fantastic tour of the Siemens Energy Innovation Center just recently with our Ethiopian guest. It was really mind-blowing. Today we have two topics they want to share with us. The first one is Tanya, who will talk about Connect to Evolve, which is digitalization of project development process for decentralized energy. And as we learned already this morning, providing energy, A, clean, B, central, decentral, and C, at reasonable cost is one of the great elephants in the room. So I'm very happy that you're going to talk us through this. And after this, we have Sylvia, who will then talk about also the nitty-gritty details of project management in such a context. So Tanya, the floor is all yours. After 18 minutes, I will start to make unpleasant noises, because that means we have to come to an end. Is that all right with you?
Yes. Okay, many thanks. Yeah, Sylvia and me are here to present you the topic Connect to Evolve. To introduce us a little bit, we are part of Siemens Energy, and Connect to Evolve is an internal startup. We are part of the venture portfolio of Siemens Energy, and what Connect to Evolve is, I would like to show you today. So we have a great vision. We would like to electrify 50 billion people with clean energy within the next 10 years. Not only for their daily life, but also to give people the opportunity to generate income out of the electricity. That's very important. And yeah, as you said, electricity is essential for personal and also for socioeconomic development. And we cannot talk about technology if there's no energy available, right? What is the situation right now? So I guess you're from Ethiopia will know the problem. So there is a lot of energy poverty still in the world. Some years ago, the UN set up the SDG, the Sustainable Development Goals. Sustainable Development Goal number 7 is clean and affordable energy for all. And the plan was to overcome the energy poverty until 2030. That will not be happen. That is something that is already known, and the bad fact is that there will be more people without access to electricity as we have right now. So the number is again rising, and yeah, the most unelectrified people are living in sub-Saharan Africa. That's why we are focusing with our idea on Africa, but we are not limited to that. And the good thing is, there is a lot of technical solutions for decentralized electricity generation out there. And all the numbers that you can see here is from the latest World Bank report. And the main and the most important solution are mini-grids, because with mini-grids you can serve nearly a half of the people that are unelectrified with electricity. And another important fact is these has not to be done by a charity. There is also business potential in the business potential, especially for developers, for project developers, but also for equipment and service provider. And what we did in the last years, we try to find out what are the hurdles. As I said, the technical solution is there. There is a huge demand for electricity there. And honestly spoken, there is enough money in the world to also finance that. So what is really the problem? And of course, at first it is a financial problem. So project developers, especially for such smaller and decentralized solutions, struggle with getting the financing for such projects. But it's not only the only hurdle, because there is a lot of money there. The question is why does not fit together the demand for financing with the money that's available. And one of these hurdles is that the smaller projects cannot show, or it's not the right size for most investors. So we were dealing with crowdfunding, so you have smaller investors there, but if you would like to tackle the whole problem of 1 billion people without electricity, then you need larger investors. And larger investors need larger portfolios. That means you have smaller project developers, local project developers on the one hand side, and investors that need a large portfolio to invest in. And that is something what we would like to solve, the problem of they both want to be this, have the same target. We would like to overcome energy poverty, but they do not speak the same language. Yeah, the one hand side is talking about 100,000 euro, and the other side, okay, I only have 5 million. So that does not fit together, and that is what we would like, or that is what we found out. What we would like to solve and how we would like to solve it. We would like to connect all stakeholders within an energy project that is, of course, the local households, local businesses that need electricity. Then we have the project developers that are able to be connected with the community and to develop such a project. And we have the impact investors on the other side. And we would like to set up a platform, as Richard in the last session already mentioned, to be more efficient, to build trust also between project developers and investors. That's very important. And we would like also to use this platform to measure impact, because it will be more and more important over the next year that impact investors really know what the concrete impact is, not only calculating before the project will set up, but also measuring after installing a project. That means we would like to measure this impact and show this to each and every investor. And we can also use this impact measuring by connecting that with, for example, CO2 certificates or CO2 avoidance tracking. So things that are familiar also with larger investors and larger companies to use that maybe also for possibility of carbon offsetting, and use this money that come out of such carbon offsetting for investing this into a project. And what we also would like to do is we would like to build up we call it a project development data pool, where we put all the data we can collect it via this project into such a pool to then help project developer to better develop their projects. Because if you would like to scale, then our assumption is if you're using digitalization for scaling up a project development process can help then to have a huge amount of projects to give to the project developers, but also to be more efficient and to save costs, because all these projects have also difficulty by now to have a positive business impact. And digitalization could be one of the enabler to turn a business case into a positive. There are other ideas out there. Also, the cost for the equipment will be they will be cheaper over the last years. That is also something that turns a business case into a positive. So what did we so far? We already did a pilot project in Senegal, and now comes blockchain in game. Yeah, because why I'm telling that on a blockchain conference? Because we build up blockchain-based crowdfunding for a project in Senegal. And here you can see there is a PV container, there's a battery storage inside, where smart meters delivered and the mini grid was built up. And we did it together with a partner, and we were responsible for collecting the money for such project via the crowdfunding platform. And what we also do is exactly we are showing the impact. That means we are measuring the green kilowatt hours that is produced by the system, and we set up an impact token. There is no value behind. For us, the project was to learn about the blockchain technology and how we can build trust between investors and project developers. And we set up this impact token, and every investor gets the token for his amount of money he was bringing into the project. That was what we did in the past, and now we are coming back a little bit more. That means in the past we are focusing on the financial process, on matching impact investors with project developers. But we learned we have to have a deeper look on the business case and how to bring a business case into a positive, and how can the project developers scale up their business. And that's why we are currently looking into the whole project development process and on which process step we can help us developing digitalized tools that bring the speed up the project development process. And that there are a lot of ideas out there for each and every phase. And at the end, as I said, we also would like to build up such a project data pool. We would like to monitor the asset, to show the impact, measuring and show the impact, but also to collect the data to then help project developers also to predict the right demand of a community. Because imagine there is a community that had no electricity at all. How do you predict the energy consumption in 5 years? So that is really hard to get. And if we build up such a data pool, then we can use this data to have a better prediction of the right capacity. And if you have the right capacity, then the chance that you have a positive business case is better. And on the long run, we use all the data we are collecting during the process development also to convince investors that the project has a proven data behind, and that they can prove that they can trust all the calculations, especially for the business case behind. Yeah, with that, maybe. Sorry? Was it a question to? No. Okay. With that, I'm not sure how we should handle this. So that was my presentation. We can directly go to Silvia, because she will a little bit talk about how does it feel to do such an venture in big corporate. So because there are some hurdles and some chances we would like to share with you.
Maybe are there some questions directly to connect, to evolve to that? Otherwise, I'm happy to jump in. I just see in the chat that there are some questions.
Okay, is there any direct urgent question one of you want to have answered? Then please speak up now.
Or we can also do it later. So that's no problem.
Exactly, or we do it as discussed. Sylvia, if I may ask you to take over and tell us. That must be very easy to launch such a project in such a company such as Siemens Energy, isn't it?
Absolutely.
Thank you. So tell us about how easy it was.
One of the easiest things I ever did in my life since almost 7 years now. And that's why I changed a little bit. Thank you very much, Oliver.
What was all yours?
Also, thank you very much, Tanya, presenting our project. And I'm not now going to give you a little bit a look behind the scenes. That's why I changed your title a little bit, put it in brackets, how to not set up a business idea in a multinational corporation, because it is, as you said, I mean, it's one of the easiest things. You can think big corporate means a lot of money, a lot of people, the entire infrastructure, easy peasy going. So this is how it not was. That's why we are still on this project. We are developing. Of course, there are many positive things, but there are also hurdles, and we have a big learning curve in the last years since we are doing the project, and this is what we would also like to share. So maybe one of you, I know we have many students here, maybe one of you will join a larger company and will still like to have this entrepreneur mind and has ideas, or maybe other ones have maybe their own ideas and want to stay in smaller companies. So it's not everything is linked to a big corporate. So I want to show you a little bit the way or what is important or not. Let me tell you, when we started with our idea, it was not that we thought at that time that we would become in a corporate startup, or that we were thinking of building up a company or anything. We were just spinning. We were just having ideas. We had something that is called the Berlin Innovation Days, where we came together and we could just brainstorm ideas. And what we realized then is that it's also very important, and this would be also somehow like an advice, don't stick to where you are at the moment. So for us means, maybe I always give a little bit an example. We are building large gas turbines, right? So it is very easy like to think, okay, how could we maybe build better gas turbines, have technical innovations and so on. But what we are realized is, okay, when we were spinning at this workshop and thinking what is there, then we also realized, okay, there's a huge need of energy, and these are not our customers, because this is smaller, this is decentralized, this is maybe not the customer what we were looking at. But when we dig into that, we saw also it's a huge market. It's not our market yet, it's not our business segment, but it is outside our core business and still very attractive. So if you go there and have your idea, what we really learned is, don't stick in your home, don't stick in your core business, think out of the box, where could be a problem and what kind of solution you could have with that. The second, what we also learned about it, we have a tendency, of course, we stick to our teams. I mean, especially when you are in a company, you have your team, you have your department and so on. In university, you maybe have the master, what you are doing is your field. But what we saw is innovation, building up a startup, doesn't matter if it's internal, corporate or not, needs a special vision, what you have, needs mindseted people, and you not always find them maybe in your own team. So we are a fully cross-functional team. We are sitting in different locations. We have different interests. We have different also backgrounds, our educational backgrounds and everything, but we do share the same vision. And this was really enriching us. This was developing what started with this little idea, then became bigger and bigger, and we are now standing here as a corporate startup, corporate venture, as we call it. So really embrace diversity. This is one big thing. I mean, we just onboarded a couple of weeks or 2 months ago a colleague from India, for the first time, and she's great. And this is, even after so many years, it is so nice to get new people in that have a totally different background, but share the same vision as we have. The third thing, thank you for speeding up, Tanya, is very important, and you don't do it in larger companies. It's to learn that you need to pivot. You need to test. You need to develop, to test. And why did I word failing needs development? Especially in a big company, many people are afraid to fail. Many people don't want to disappoint their managers, and so on and so on. But when you create a business idea, it is so important to pivot and to fail, because when you fail, you learn the most. It's not nice. It's most of the time it's not really pleasant. But looking back on our failures brought always the biggest developments. So this is something what we really learned. We learned not to be afraid to fail, not to try to test things even when we don't know the outcome, and so develop by that. What we also learned is when you are in a very big company is that there are many people you don't know, and they have many expertise, what you can also then use and get into your idea. And we really learned that it is so important to not stop learning, to share what we learned also with others. And what we also learned is don't stay in the corporate bubble, get out. Get out, talk to other people. This is why we grew over the years a really big network. This is why we invented, also we started here in Berlin with meetups. What we did, also inviting external startups, external people who are also interested in blockchain and this kind of topics, to network, to learn and to share. Very, very important, and I can just recommend that. What we underestimated in the beginning, it was really stakeholder management. Also, when you do it in a big company, is essential. So it is very, very important. Always have a supporter, because at a certain point you need budget, and you also need more budget, and you need some managers who is supporting your idea. So and normally you don't. What we also learned is it's not the same supporter all the time during the process. Supporters are changing. So it is very important already when you have the first stakeholder, the first supporter, already also spin out and see somehow which other supporters could be valuable for you maybe in the next time. So this is why we really underestimated that. It is a big part of our work in the moment. In the moment, we also learned very hard. For example, I mean, I can share that we had a time also when we didn't. No, we took care of that, but we didn't find for some time a supporter. What meant we were without money for, I think, 8 months. And it was not a funny time, I can tell you that. I mean, just because you may be in a corporate, if nobody is supporting you, if you don't have the budget, your idea, your startup stops. It's internal, so it's the same how it is external. It's not different. That's why if you have ideas, if you want to go out, stakeholder management, I can tell you, very important. And what is also very important is to talk about your project. Of course, it is that somehow people are afraid that other people would steal their idea and so on. We were very openly always selling, not selling, but really pitching inside and outside what we are doing. And it is very important. What we also learned is to listen to it, because it's part of this pivoting, that not every critic is something that breaks you down, but integrate it. Listen to your customer. Listen to who could be the potential first customer who would buy the new product. But, and there's a but, and this is why we also put it in. When you pitch, when you try to sell, there will be many no's, because the one doesn't like Africa, the second one finds blockchain stupid, the third one, I don't know, doesn't like clean solar energy or whatever. You will hear a lot of no's. And this is why what we really learned is, I mean, in the first times it was really devastating, and you feel really bad when somebody didn't like your project and so on. But it is very important, and then comes even the next, to grow resilience, to even if you hear the snow, there, as I always say, there will not always be a door. So find a window, or if you don't find a window, find some other solution. See how you could somehow solve that this no will turn into yes, maybe with somebody else. So what we really learned is that resilience is very important. I mean, we now, people now support us, get back to us, because they saw over the years we never gave up. We absolutely never gave up. Tanya showed in the other one last year, we even received the Siemens Energy Innovation Prize. We were nominated and selected by that. But this is nothing what came like in the first or the second year. So don't stop, grow resilience, don't change yourself, because there will be many people who don't like the idea. And I can tell you, it's very frustrating also inside of one company. There can be a lot of resistance against an idea that doesn't maybe fit to the core business, but it's something totally different. Listen to it, what you can take, change it, but go your way. And this is, with that, I wanted to close and put it in. You need to be in a corporate, like a free radical, and spin around, and don't give up.
And I would like to add, to bring it more into positive, right? Talking to the beneficiaries was for us the most motivating thing, because we were in the village in Senegal. We talked to the people before the project was installed, but also after installing the project. And it was so interesting to see the people, what they are looking for to do with the electricity, how they would like to improve their daily life, but also their businesses. And that was really something that catches us behind all the ideas we have. But that was really the things you have to talk to your beneficiaries, because that is the most talk that motivates you most to go forward.
And with that, we would finish. We thank you for your attention. We are happy if there are some questions or comments. We are very happy to listen to it. As we say, we are always interested. And then we would hand over back to you, Oliver.
Thank you so much. Thank you so much. You may want to stop sharing your screen so we can see each other. Now, oh, now I can even read your emails. You don't want that. In the upper corner of the screen, you find a Bildschirm teilen beenden. Exact is this. Oh, there you go. Yeah, there you go. Okay. Thank you so much, Tanya and Sylvia. Fascinating. Maybe I start with one question, okay? And then the others, and please, I would appreciate if we had our cameras on that we can see each other. That would be great. And I'm not blindfolded again. Thank you. Daud, yeah, now I can see you. Okay, so my question is, you said one of the important things, especially when you're in complex territory and when you're developing a new business model, is agile project management. This is how you pivot. You need to understand, you build, test, learn, and then you do something accordingly. How does this match with the PM at Siemens process of waterfall project management?
Not at all.
Not at all. They needed to get used to us. So it's like with the, we don't have one there. It's like with the European Union, where they always ask, where is this one phone number? So like in the US, you call the president. What is in Europe, where's the phone number? So of course we got also asked, who is the project manager? And we always said, we don't have one. We are agile. So they got used to us. As I said, resilience. Be radical, be resilient. Of course, we have single voices to each of our, let's say, customer or partner. So nobody needs to deal with all of us. Everybody has his or her expertise. But you're right. They needed to learn it, and they did.
Yeah.
And
okay.
They maybe like it. So no, we didn't change. It is agile, and we are still here.
Obviously, so that's the proven point, I would say. Thank you. Please, guys, any other questions for our presenters, then please speak now. If you don't have any questions, I threaten you to discuss agile project management with them for hours, because that's one of the things that's really high on my scientific agenda at the moment, but I don't want to bore you to death. So, any other comments? Okay, then. Thank you very much, Sylvia and Tanya. Round of applause again, virtually or analog, however you prefer it. And now, my favorite TV show would say, for something completely different. Because now we have Ricardo. Ricardo, are you here? Are you with us? Please come forward.
Hi, Oliver.
There you
Hi,
are.
everyone.
And Ricardo is somewhat of our secret Santa in this session because he has not disclosed his topic to me yet.
Yes.
So I'm lost here. And therefore, without further ado, Ricardo, CEO of INATBA. Well, you know a lot of things. Share them with us.
Thank you. Already, thank you for the opportunity, and apologies for not disclosing the topic. But we have been passing a quite 2 hectic days and a half here. Also in the room, Bara Greplova, which is our governmental relations manager, that knows that it's been a very hectic since the, let's say, end of summer or summer break. So we had a digital blockchain week with 40 panelists as well. And Oliver, I don't need to say to you how hard it is and how hectic it can be to organize a conference. But
oh dear, yeah.
First and foremost, congratulations. From what I've been listening so far, it has been it's a very successful one, and I definitely thank you. You and Katarina Adam for having me. So since I didn't disclose the topic, the idea is to give a little bit of a review on how we see blockchain and how a role of an association enters into play here. So INATBA stands for International Association for Trusted Blockchain Applications. INATBA was launched back in 2019 by the European Commission, feeling the need to have an independent player, an independent association that could gather industry, industry players, governmental sector, and academics in the same entity, providing discussions and thought leadership that would be helpful to drive policy, regulation, and standards for the blockchain ecosystem. So INATBA is a little bit focused on helping to shape the regulatory landscape, not only in Europe, but also responding to worldwide organizations like ISO and other standard-setting bodies, helping them to provide clear guidance, clear guide rails for the industry to achieve what is hoped for the ecosystem, that is interoperability of blockchains and the possibility of different protocols being able to communicate in the same language with each others, and that would allow for possibility of new opportunities in terms of entrepreneurship. So, but please let me come back to what I actually thought of saying at the beginning. I felt that since I haven't gave the topic, I should give a small introduction to what INATBA does. So I would like to come back a little bit to the promise of blockchain. This to a little bit to frame this presentation, and I hope that could be more interactive, and actually I'll be able to answer some questions, of course, if they are. So the promise of blockchain and distributed ledger technology represent a promising paradigm evolution for society, offering several key promises. Firstly, they promise enhanced trust and security by providing immutable and transparent records, transaction, and data, mitigating fraud and ensuring the integrity of digital information. So yes, despite misconceptions, and I know that there, from what I heard, there's some students in the room. So despite misconceptions, blockchain is more transparent than the systems that we currently have. Secondly, these technologies hold the potential to democratize access to financial services and resources, enabling financial inclusion and reducing the influence of intermediaries. Thirdly, blockchain and DLT can streamline and automate complex processes, leading to increased efficiency and cost saving across various industries. Moreover, they offer the prospects of fostering transparency and accountability in supply chains, healthcare, and governance, ultimately driving sustainability and ethical practices. So in sum, blockchain and DLT offer a pathway to more equitable, efficient, and trustworthy digital future for society. But so this was and it still is one of the key promises of blockchain. But what actually blockchain is, and we face a lot of times with the difficulty to explain to people what blockchain is basically a foundational communication infrastructure upon which innovative business can build and thrive. By providing a distributed ledger that enables trust and data integrity without relying on intermediaries, blockchain lowers entry barriers for startups and established business alike. Beyond serving as digital currencies, which is one of the applications, the applications that of blockchain, blockchain offers an ideal platform for the development of decentralized applications, dApps. These dApps extend the utility of blockchain technology beyond pure store of value, encompassing a wide array of services, including finance, supply chain management, healthcare, and more. Utility tokens are often integral to these dApps, granting access to specific functions or services within their ecosystems. Blockchain smart contracts capabilities further enhance its appeal to businesses. These self-executing contracts automate processes and transactions based on predefined rules, reducing the need for intermediaries and streamlining operations. This not only cuts costs, but also enables the creation of novel business models. In essence, blockchain is more than just a technological innovation. It is a fertile ground upon which the seeds of new businesses can sprout and flourish. So, in that regard, what we are trying at INATBA is to enhance a more decentralized ecosystem that can bridge the traditional sectors of the economy with this decentralized ecosystem. And in order to do that, three things I think are essential. One is education. And I mentioned Katarina Adam, one of the hosts of this conference, which is an esteemed and very active member of our education working group, worked in a paper that we published recently, some months ago, on the need for new skills to actually address this decentralized mindset. And with this paper, we are leveraging the need for national authorities in terms responsible for education to include that in their curriculums, into their schools, in order for not only business schools or technological schools, but legal schools as well, in order to understand some of the complexity of the technology, but also to be able to prepare the students and the ones entering in the workforce of the new challenges that lie ahead. A second is regulation, as I mentioned. So what we hope for, let me start with what we hope for. We hope for a global framework in terms of regulating some of the activities blockchain related that could be in agreement with the cross-border nature of the technology. In that sense, we are working collectively with our members, and sorry for my camera, we are working collectively with our members to respond to consultations on the regulators on different countries and the ones that have a more wider and global jurisdictions like IOSCO, for example, to give you some of the consultations that we are currently involved in on the implementation of MiCA, Markets in Crypto Assets in Europe, on the DeFi consultation issued by IOSCO recently, in the global framework for crypto assets that IOSCO that we responded in the summer, So there's a lot of complexity in terms of the regulatory space. And we see in other jurisdictions that the indecision is there. And we are trying to help them with examples with what was achieved already, for instance, in Europe with MiCA, to support a less fractionalized regulatory framework. Because that is important when a startup looks at the space and thinks about blockchain as a good fit, a good technological platform fit for their products, but then are faced with the uncertainty of how they can go about it, being a small company, a startup with fewer resources, and focusing that oftenly in developing. So they need to have clear guide rails on which to build with. And lastly, I would say that one of our main concerns right now in INATBA is demonstrating, even if blockchain has been around for 14, 15 years, in technological terms, that's not a lot. We've been seeing constant evolution since the Bitcoin blockchain. We see blockchains 4.0, and we will see blockchains 5.0 and further down the line. And they are tackling some of the pain points that the technology had in the past. This is coming together with the natural evolution of the developments that are ongoing in those companies on the protocols, and that the question is, there has been some impatience with politicians, corporates, trying to seek for immediate answer and immediate benefits from the technology. And since we pass, let's say, I would say the first hypes on blockchain, and we are now in a solid building ground, we need to demonstrate, so it's paramount that we demonstrate the capabilities and the ongoing use cases, and that are more and more each day on blockchain being used on real life activities. And we have those use cases. Just to give you an example of two companies, members of INATBA, HTW, for example, which is providing microfinance to communities, to coffee producer communities in South America. The difficulties of some clusters, small businesses to get access to finance, and we understand the different constraints on different jurisdictions across the world and different continents to get access to to finance and to finance their businesses and to finance their endeavors, can be definitely handled by blockchain. And that's, for instance, what HTW is doing. Another example is Urban Change, for example, which is providing for cities to actually incentivize some of the behaviors of their citizens. So we are seeing a lot of projects that can be built for the benefit of citizens, being built on blockchain. This is important that we bring forward those use cases, and that's why, for instance, INATBA launched the industrial blockchain task force in order to map the existing use cases and consortial activities across industries, and that we can share by the means of educating and informing the policymakers, the politicians, the decision makers, CEOs at the corporate level. I just heard the presentation from Siemens, the difficulties of explaining to their CEOs what is the project about and how they can actually cut costs and leverage new businesses. So this is essentially the message that I wanted to pass. We are a collective, inclusive organization, having startups to large companies with 50 governments and supranational organizations like the UN and the World Bank and the European Investment Bank, and we are working together in order to shape the landscape for the development of blockchain technology and to explore its full potential. Thank you. I'm available, of course, to any questions that you would like to ask.
Wow, thank you so much, Ricardo. The promises of blockchain.
Yes.
Yeah. This,
and it's time to deliver on those promises and to demonstrate on those promises.
As an innocent bystander, that would have crossed my mind as well. Okay. Fascinating food for thought. Please, guys, any comments or questions, fire away. It shouldn't always be me who starts. Why don't somebody of you? Questions, challenges, supports Ricardo's statements.
We have a very knowledgeable audience, Oliver, and I think that is the most important. So I think that the message here is let's definitely align and bring blockchain technology to the next level, one block at a time.
Okay, can I have some devil's advocate questions?
Sure.
Among friends here, nobody will hold that against me. Okay, so here's my point. I'm a professor focusing on digital strategy and transformation. So I may have some ideas, but of course, I don't understand blockchain, no doubt about that. The only thing I understand is that every other year I find an article in one of the tech magazines that I cover, which is headlined "Why Blockchain Technology Hasn't Really Taken Off Yet, But Keep the Faith." And this is a story I read over and over again. If we just compare it with the let's say with other digital mega trends, I'm really poking you, you know that. It's nothing personal. Cloud computing, AWS launched 2006, 80 billion revenues alone. Mobile computing launched 2007, 2008. Finally, blockchain launched 2008, 2009. And still, I sense, again, as a layman, as an innocent bystander, that this is an industry which still is presenting each year a new set of use cases. Where is the money?
Where is the money?
Where's the money? Show me the money, Jerry, as Toby Maker once put it. So this is the question I'm asking to all of you. Just help me as a layman, win me over. Win me over. When will this fantastic technology with all its fantastic potential applications finally give me a positive return on investment that is worth one?
So if I may, I think that since when we are talking about AI, for instance, and we are
1985
exactly. So I think that we are at the cusp, and we see from the developments on different protocols dealing with problems with scalability, dealing with problems with sustainability, don't need to remind you, for instance, that the merge from Ethereum from proof of work to proof of stake happened just a couple of months ago, for instance. So I think that blockchain is dealing at the same time with the necessity to immediately cope with the different challenges and incumbents that want to preserve. And by definition, Oliver, you know that we are resistant to change. We are resistant to change. And blockchain actually, and let me give you an example. We had a session 3 or 4 months ago about supply chains and blockchain for supply chains. And we tackled a very specific example, which was the TradeLens project. I don't know if you're familiar with the TradeLens project. It was a project, a consortium project between IBM and Maersk for the containers and tracking the containers on that. And with actually tracking the supply chain, having the all the stakeholders involved. But this was, and looking at it from a strategic perspective, trying one company that already has a dominant position in that market, trying to control the new infrastructure where the other ones were to be built. So perhaps this reminds a little bit of how we think of business models today, exactly, which is if the strategies are mainly, let's go by integrating vertically, controlling all the supply chain, controlling all my business steps from production to the client, or integration horizontally, buying competitors. So that's why, from a technological point of view, and that session was very enlightening about that, from a technological point of view, it was it kept its promise. It kept its promise. It was working properly, guaranteeing that third parties could trust what was there. But from actually a governance perspective and a business perspective, it was not successful, because they didn't get the adoption that they were looking for, actually. So they shut down the program, saying that we didn't get the viable return on investment for these projects. So, and I'm just sharing some of the insights that were from that session, and what we think it will happen, and considering problems like digital sovereignty, so having the nodes on different countries that sometimes don't see eye to eye and don't like to actually have that exposure. So and also problems like mistrusting one single partner to run it all, run the infrastructure. What the future holds will be perhaps 20, 30, 40 different blockchains having the standards to actually communicate among themselves and being able to provide that supply chain tracking on blockchain and instant verification. So I think that, and this resonates a lot with what we do at the Education Working Group of INATBA, which is even at the CEO level, at a strategic level, at an innovation level, people have to, at one point, start to think, what can we build on top of this new infrastructure of communication, of sharing, and what services we can provide, instead of let's try to control all the value chain. Let's try to control all the value chain, because I think, and since we are talking to students, I think that in my opinion, and we are seeing some changes there as well. I don't know if students, like at my time when I was a student, aim immediately, oh, okay, when I get out of university, I want to go and work for that big company. Because now they also know that being a small wheel in a big organization is not that fulfilling as it might appear.
Divya,
So,
Tanya, are you listening?
And just to conclude, I think that they are looking for impact. They are looking to create impact. So I think that more and more entrepreneurship, and my background is in working with entrepreneurs. They want to get their things done. They want to work on something that they're passionate about. They want to work on something that they can create impact. And blockchain, through different forms of organizing the work, talking, for instance, about DAOs, talking about different forms of funding themselves, can bring that promising paradigm evolution that I was talking about at the beginning of my presentation.
Okay. Yeah. Any other comments from you guys? I thought I was provocative enough. Larry, thank you.
Yeah, I guess I've been following blockchain for quite a while. And I think one of the biggest issues is we have to find use cases where it really works. Mm-hmm. The biggest issue right now overall is it's overpromised in the areas of scalability. Mm-hmm. There are use cases where that's not an issue, and we need to focus on those. There are use cases where scalability is an issue, and I don't know of any really good solution for that today, and I've been searching for it for quite some time. In addition, there's also issues of, as Ricardo mentioned, multiple blockchains, and going between blockchains is a big issue with bridges and security, as well as getting from the physical environment to the the digital environment is another issue. But those are, to me, secondary. If you don't get the scalability issued, mm-hmm. you're not going to get this. And so if instead of overselling it in so many areas, find cases where it really, really works. As someone mentioned earlier about, focusing on, I think it was from the European Commission, focus on, funding local communities where it's just a funding issue. You don't have to put in a lot of transactions to get that going. That's a great use case. Mm-hmm. You mentioned, overselling. Look at artificial intelligence. ChatGPT has been out for less than 10 months, 11 months, I think. And it's already taken over the world in so many areas. And to me, that's what's the key. No one promised anything. We've been promising for AI for a long time. It was really doing something that really worked. And I think that's going to be a key to blockchain is focus on areas that we really, really can work. There are those areas, and stop overselling in areas where it can't. You mentioned the IBM venture with containers. There's also the Australia stock market. I think we've tried to do too much, and then we end up failing till we get the scalability problem solved. Your 7 to 20 transactions a second. Focus on areas where that works, and then you have successes there.
I couldn't agree more. Couldn't agree more. And definitely just kind of a small segue to what you were saying, Larry, is that I don't know if people have realized, but the technological triangle between AI, blockchain, and devices, IoT, it's a triangle. It cannot be broken. It has to go. It has to go at the same pace, because the new challenges that AI, generative AI, is bringing to the table, there's no centralized solution for data that can control that speed and that. So definitely, I think that that the three go together.
I agree, particularly in the areas of identity management with AI. It's another huge area that we're going to have to reel in, and using blockchain. I mean, in a sense, you know, some of the technology is used and not even talked about. When you talk about, you know, technology in terms of source code control, and that's done all the time using, you know, a distributed cryptographic ledger, and no one even thinks about it. They wouldn't even think of doing it any other way.
And maybe it's one of the, let's say, opportunities now, since artificial intelligence is currently probably not taking over the world, but at least taking over the world of media, gives us a bit more breathing space to shape up. And I'm not, and I think it was really, and this is why I made these ludicrous comments. It was mainly about how not to oversell this, because again, the technology and the potential use cases, it's a no-brainer. Absolutely agree with you. The way it has been sold in the past has probably done more harm than good, and now maybe in the shadow of open AI, we can happily plow along. Okay, thank you.